Hello guys, what's up everybody? It's on Monday. Wow, it's another great day, another great opportunity that indeed the Almighty has presented this day unto us, and it has been a great day, a good day for um, self-reflection and also self-improvement in various ways. Another day getting to uh, find something to learn from and also extract an experience from the charts. So before we get cracking, first of all, I would like to thank you for those watching these videos, and kindly, if you're watching, please hit that like button and please subscribe to this channel so that we may get to grow together and create this great community that I'm trying to bring up from zero. I'm starting this community, and with time I know we'll grow better. We'll get to be 1% better every day as we look onto the charts every day, all day. So as you can hear from my side, I think my voice is not normal, and it's something I don't know what happened, because I've been good throughout the day. I don't know what has happened to me until I feel somehow I'm experiencing a flu. So I don't know whether it's cold, because over here it's kind of cold. I'm also, I guess I'm warm. I have my jacket on, but as you know, always I'm a place where I do love doing this shit. I'm outside my fucking house, and because I like it when I, I I feel a cold breeze, and that makes me not being comfortable, and to some extent I'm fresh. I'm fresh, so I can talk about what I did, what I'm expecting, what I'm learning. So yeah, before that, let me have my sip of water. Wow, my water's poured down, man. Yeah, let's go back. Let's get cracking. So, what was I expecting today, and what really happened today? So, as I made a video before the trade, what I expecting. So, the most previous video before this one, I guess you can watch it and see what I was anticipating to see today, and maybe this week. So I guess I don't know. I'll go quickly through these, and this is the let's go back to the monthly time frame. This is the monthly time frame, and what you can see is we have this buy sell liquidity that was grabbed by these months week. You can see how we had this huge retracement higher, clearing this buy sell liquidity. Then you can see this candle has retraced below liquidity, and I'm expecting to see it close inside liquidity. What do we mean closing inside liquidity? You can see this week this candle cleared this BCL using this week, but it closes below this liquidity that has been called. That's what I refer to closing inside liquidity, right? If it could close outside this buy side liquidity over here, this BCL, this buy side liquidity, so if it could, this candle could close above the liquidity, then it has closed outside liquidity, right? But over here this week did the damage, clearing or engaging with the liquidity, then it has it's rally lower, and probably it will close inside this liquidity. So that's why I'm saying in liquidity. So one thing we know, a candle forms in three phases. We have the accumulation phase, we have the manipulation phase, and also we have the distribution phase, because today it's 11 days to go before this candle closes. I was saying about the first week of a month we are expecting to see an accumulation phase. Then from the second week to maybe the early third week, we are expecting to see a manipulation phase, right? Then from the early third week to the fourth week, that's when we are expecting a distribution phase. Okay, so currently, since I'm seeing we had these rally higher, this huge rally higher, these are both the accumulation and the distribution, the manipulation phase, and now we are in the distribution phase. And if for now we are bearish, then I'm expecting this candle to close bearish, because only 11 days to go before this candle closes. So to draw that clearly, so we have to drop to a lower time frame. This is the weekly time frame, and also definitely we also expect the same, the power of three: the accumulation, the manipulation, and the distribution. Something else I should be talking about, and I should also be embracing, is like today you can see this week, it's on Monday, you can see the week really doesn't have like it has not given us a clear distribution. We cannot see a clear distribution on a Monday, but when do we have a clear visual glimpse or a glimpse of a candle distribution phase? I guess during the end of the week, that's when we can see how we are expecting to see a candle close during the distribution phase. Why? Because on Monday we should be expecting to see a manipulation, either way, also on a Tuesday, but both Tuesdays and Wednesdays usually are the manipulation phases. Then from which maybe the late Wednesday we are expecting to see distribution phases. So Thursdays and Fridays are days that we can really have that clear picture, that clear visual or visual picture of a weekly candle, how the weekly candle might close, right? So on Mondays it's not recommended to trade, because that's when these accumulation phase mostly of this weekly candle forms. Okay, so it's not recommended for us to be trading on a fucking Monday, right? But if you see a structure, or you had a plan to trade through that accumulation, then well and good, but it is not usually recommended for us to trade during Monday. But I did, and I got punished for that, and I will be reviewing what happened. So over here, how I read my weekly chart, we can see this weekly candle had retraced higher. I guess in the previous video you will go watch, and I was using my Fibonacci tools. So I used my Fibonacci and realized this candle had tapped into the constant encroachment of that week, then rallied lower, closed, it opened here, rallied lower, tapping into this order block. I guess this down close candle, you can see it tapped into it here. Then we had this rally higher, then it tapped into the constant encroachment of this down close candle, then sharply rallied lower, closing below the mean threshold of this order block, because this last up close candle is my order block. So it closed below the main threshold of that order block, right? And also we can see on Monday something I didn't watch, honestly. It's now I'm seeing it. I wasn't observing these candles week. Okay, I really didn't notice it. It's now that I'm noticing it. It's now for real, and it's kind of a mistake, right? So we had that week, which I should have observed the constant encroachment. Sorry guys. And what can we see? The market today on Monday has rallied higher, tapped into that week's constant encroachment. Then we can see it has lost some strength. So going back to the daily time frame, this is the from the high, this high to this low, from this body's low, this the weekly week, right? So you can see how this candle rallied higher, tapped into the weekly constant encroachment. I guess you can see this red line, this 0.5 line. So you can see how we tapped into it, then we lost strength. Also, we can see how it tapped into this daily order block. So I'll be using this body, this daily body. Yeah, that's the order block. It has tapped into its constant encroachment and rallied higher, which is something we anticipate. Why? Because it had to tap into the, like it tapped into the week constant encroachment. So these damage is expected, so, or is anticipated. So that's what happened. And I guess I've realized the mistake I did do today. I wasn't keen. Like for today, I did blunder, or I did make mistakes, or whereby I wasn't keen on higher time frame weeks, right? So the week I had really forgotten about it, and so we can see the market rallied, tapped into it, then we can see it has lost its strength. So into the 4 hour, what can we see? So I guess this is the constant encroachment. I'll go back. I want to undo until I have the week. Yeah, so I'll draw a line there to represent my week constant encroachment. I don't know how I did forget. I don't know how I didn't see. Yeah, so I'll not label it, but I will be mentioning it. So that's the weekly constant encroachment, the week constant encroachment. So we can see how the market rallied, tapped into it, then we have these downward displacement. And where did it tap to? Where else did it tap to? So we have these high, low, lower high. So we have this down close candle as a mitigation block. So this down close candle, which is an order block to support prices higher, but we can see over here, sorry, someone my security, my safety, I thought was being compromised, because I had someone slowly coming to my side, but he has no business with me, so that's why I was hesitant for a while. Sorry for that. So we have this order block that supported prices higher, right? Then over here, this candle, we can see this order block was violated. So over here, I don't know, it's easy to see these things after they have really happened, but while watching the markets, maybe I have not yet still made it to that point whereby my analysis is on tick, but and I'll still fight for it. So we can see this week is paired with this daily. It's a 4-hour mitigation block, because it's a violated order block. Okay, so we can see the market tapped into it, then we can see that retracement, a sharp retracement lower. And how was I looking at price? Because for today I was looking for sales, and for real, I did make blunders, I did make mistakes, and the bad thing is these are mistakes that I'm repeating. The bad thing and the good thing is these are mistakes that I'm repeating. So it's not a bad thing, it's a good thing too, to some extent, because I'm learning from this stuff. So I guess you can remember the previous video, the previous review we did. Before market opened, I wanted to see this price retracement higher. Maybe from this 4-hour fair value gap, it should retrace lower. Okay, so as you can see, this arrow, this path, I wanted to see retrace higher, react off the 4-hour fair value gap, constant encroachment, rally lower, maybe to come and clear these lows, with our draw on liquidity being the sell side liquidities below. Here we have these equal, relatively equal lows, so that's the draw on my liquidity. But what happened is it retraced higher to that weekly weak constant encroachment, tapped also into this 4-hour mitigation block. Let me change the color to purplish. Yeah, that 4-hour mitigation block, and we can see that retracement lower. That's what happened. But going down to how I was reading prices, you can see these, we have this red line, it's labeled as the weekly weak constant encroachment. Let's go back to the weekly weak constant encroachment, and I get to see this week I was referring to, yet we have another week there. So what was I really referring to? This is the weekly weak constant encroachment. So going back to the weekly time frame, what is that? What is that weekly week? Let me make it thicker. I don't know. Was that okay? Over here. Holy shit. So for real, where did I remove this week? Where is this weekly week constant encroachment from? Because this the oh no, this the, or maybe I miss, because this is the weekly. Above this zone, this is where we have, okay, sorry, so this is where we have the weekly weak constant encroachment, not this level. Did I confuse or what? Why is it labeled over there? So I guess I have labeled the weekly weak constant encroachment. I'm getting something wrong here. I'm getting confused. I'm really getting confused. Or did I use this body? Maybe I used it. Oh no. What is that? This weekly weak constant encroachment. Or did I move it as I was doing my analysis? Could it be? Okay, I'll just get rid of it. I'm not understanding. but maybe because I've labeled it clearly, maybe really, but this is the first time I'm referring to this point. Okay, sorry for not really making you understand how I did. I'm not also understanding, but if I remember, I'll tell you how I did read the price. So we can see over here. So I was watching price over here at around 1. I saw this candle play out really as I wanted to see. It tapped into the constant encroachment, then rallied lower. And what did I see? I see it close below this 4-hour weekly fair value gap, right? So it started at 1 and I guess finished at 5. So this one at 5 I guess was to finish at around it was to be around at around 9. So dropping lower, how I did analyze price is I had this displacement lower, but it was around 5, so I can't trade until it's my New York time session. So I saw it retrace higher, what I wanted to see, and I was observing this wick over here, this 4-hour wick over there. Something else happened over here, so you can see the 50 level here. The candle closed as I really wanted. Okay, so I was watching that and I saw it close, and this one opened and closed below at around 9, right? Something I really wanted to see. And after that had happened, now it was time to look for my entries, right? So I dropped lower and something was happening, really I don't know how, but my first trade was at around this zone. By the way, I placed a trade around here, but I got stopped out. So I was now patient enough, waited to see this reaction. I saw this reaction, and also this high failed to clear this high. So it was now a clear opportunity for me. So I saw this candle closed, fully engulfing this candle and close below this 15-minute order block there. So I waited for this candle to close, and it closed as you can see. Then there was a fair value gap there. I'll then entered my trade here, targeting a 1 to 2, and I was targeting 1 to 2 inside this fair value gap, with my stop being above. It was above those the close of the candle. I was targeting 1 to 2. That was my first trade, and it's today that I've come to realize spreads are something I should be also working on, right? So I did see this retracement lower because I entered on this weak. As it tapped inside that, it rallied lower. I was comfortable. Then after I'd seen it close below this order block here, this mitigation block, I moved my stop loss there. So I was I wanted to see this mitigation block support prices lower, but guess what happened? It rallied higher to my entry point, and at this point spread did the thing, and I was taken out before even my stop loss was tapped in. So something else worthwhile to learn is I should be considering the spread, and I should also find a way to deal with the spreads. So that's how I was taken out on the second trade. And then this third trade, I didn't I guess it's the same. Is it really the same? I don't, yeah, I guess this is the same trade, but this is the same trade I was talking about. But what happened is when I tapped into the sell button, because I wanted to sell inside this fair value gap. I'll take you back to the 15 minutes. So inside this fair value gap here, right? So I'll draw it so that that candle's low, that candle's high, yeah, make it blue, then drop to the 5 minutes. So yeah, so when I did enter my trade inside here, I don't know, I didn't have a sell limit, but when I tapped it, I found this trade entered at around this zone over here. So that's why I placed these at the exact point where my entry was at. Yeah, but you can see what happened. I was stopped out at around this zone, and because I had moved my stop from this level, I'd moved my stop above, from above these candles high. Yeah, those candles highs targeting a 1 to 2. Excuse me. But I was stopped out, and even though later on if I could have held that trade, it could have been a loser, because the market traced to that weekly wicks constant encroachment. Sorry guys, I think I'm tired, and it's not that I got it wrong. I should accept I didn't I wasn't that clinical and careful enough to watch or to observe everything. I didn't take my time enough on the weekly chart to spot the weekly week, because weeks are so important. The higher time frames weeks are so important. So I didn't take time to scrutinize the weekly time frame, and that's a mistake I have to learn from as early as possible, because these things should not repeat again. So whatever I'm expecting tomorrow is let me take a screenshot of this, because it should be my yeah. So now, since everything, I can take off this and see what we can be expecting tomorrow, and get to analyze, because I have seen the market has already tapped into that weekly constant encroachment, and has already tapped into respecting we can see this order block that was being respected, the daily order block. We've seen an immediate rebalance. Okay, I'll delete also this, because this was my immediate rebalance. Then this is the week constant encroachment. Over here, this black line, I should label it this is the weekly week constant encroachment. Not, is it constant? Yeah, constant encroachment. Yeah, I guess so. So yeah, so that we may not forget. So we can see the weekly constant encroachment has been tapped into. Then we have these 4-hour mitigation block, 4-hour MT mitigation MB mitigation block. You can see how it was tapped into, and we can see that sharp retracement lower. And from the daily, anything else we have these change in state of delivery. This candle close below these, and maybe our target should be below these lows for tomorrow, and before that. So I'm expecting to see some consolidation here, then from which tomorrow we can see sharp. I'm expecting during the news we might see retracement lower. You can see how the bodies are respecting this 3-hour fair value gap. They are closing inside, but the wicks did the damage. You can see this fair value gap over here. This candle's low, and also this candle's high. I'm referring to this candle's high and this candle's low. You can see how the bodies are respecting by closing inside, but the wicks are doing the damage. So I'll delete it because we have this 1 hour order block that was here. You can see the bodies are doing respecting, I guess. Let's see the main threshold of this order block. So the candles are closing around the constant encroachment but slightly above, so nothing bad about that. Then you can see this sharp retracement lower over here. Tomorrow might be consolidating, but tomorrow I'm also bearish. We have these liquidities over here that should be grabbed, and maybe we have these equal lows that should be my targets for tomorrow. So let me see if we have I want to see a market maker sell model, whereby over here we have seen these buy side liquidities above here has been grabbed, and yes, I want to see these lows being taken out, and a market structure shift formed. Then I will look for lower prices. We have this order block here, this fair value gap, this candles low, also this candles high. You can see how the bodies are respecting the constant encroachment of that, of this fair value gap from the high. From that high to the low, to the high of that, from that, yeah, from the low of this candle, this down close candle, to the high of this down close candle. You can see the bodies closing around the quarter level of this gap, but the wicks doing the damage to the constant encroachment. So that's a sign that we might be heading lower. But before that, I want to see a clear market maker sell model. Then we'll be looking for our conferences going lower. Tomorrow we have news, so I'll be keen on the news and I'll be watching that. So that is it for today. A worthwhile of learning. I should be more clinical and more scrutinizing on the higher time frames. Be careful on the wicks, and also I should follow my model, because for today the trade in the morning, I didn't see a clear market structure shift for me to enter, but I did enter. So that's something, again, I did a mistake, which I know shouldn't happen like that. So that's the mistake I made for today, and also the spreads. So it's something worthwhile to find a way on how I can handle that, because I don't want to be funded and be losing. Let me lose on a demo account, then I get to see what I can really do. Then before I'm funded, then everything will be good. So that is it for today. Thanks for watching this video. Please remember to like, remember to hit that subscribe button until we get to talk again tomorrow. Please be safe, and may the Almighty keep you safe and guide us all. Amen. Until next time, bye.